China's economy grew faster than expected in the first quarter of 2025, expanding by 5.4% year on year. But as analysts warn, this positive news comes with serious caveats. Here's a breakdown of the 10 key takeaways you need to know. China's Q1 GDP rose 5.4% compared to the same period last year, exceeding the 5.2% forecast by Bloomberg and matching the previous quarter's pace. The surprise lift came ahead of newly imposed US tariffs. March industrial production surged 7.7%, the strongest since June 2021. Factories rushed to fulfill export orders before tariff hikes, front loading the gains. Retail sales in March jumped 5.9%, outperforming expectations. Government consumption subsidies helped, but analysts note that low consumer confidence due to weak job prospects could limit future growth. Fixed asset investment rose 4.2% in Q1, with infrastructure and manufacturing leading. However, property investment dropped 9.9% as the real estate crisis continued to weigh on broader growth. The jobless rate fell to 5.2% in March from 5.4% in February. Despite the slight improvement, the labor market remains fragile, particularly in export driven sectors now facing headwinds. April brought a dramatic escalation in trade tensions, with President Trump raising tariffs on most Chinese goods to 145%. China retaliated, further straining the export outlook. Exports surged last month as companies rushed to ship goods before tariffs hit. But economists expect a steep drop in April and May as global buyers pull back. UBS downgraded its 2025 forecast for China from 4% to just 3.4%. Goldman Sachs and Citigroup also revised their estimates downward, citing tariff pressure and structural weaknesses. The National Bureau of Statistics acknowledged rising risks, hinting at more support measures. Economists expect rate cuts, lower bank reserve requirements, and multi trillion yuan stimulus packages in the coming months. Despite upbeat data, the Hang Seng China Enterprises Index fell by 2.4%, the CSI 300 dropped 0.8%, and the yuan held steady at 7.3236 in offshore trade, reflecting investor caution amid growing uncertainty. So, while the headline number is positive, the broader picture suggests storm clouds ahead. The coming months will test whether China can weather the tariff shock and keep its economy on track. Stay tuned for more updates.